Hello, we are doing a video about exchange flow balance and supply and exchanges today. It is the night of December 20th, where I am here in the Pacific time zone in the US. For many of you, it's already Tuesday. We just came off a pretty nice Monday with Bitcoin up at about 48.4K at the time of this recording, and Ethereum is just barely over 4,000 at the moment. But overall, it's been a nice recovery after a bit of a down weekend, and I thought it would be interesting to take a look at where the supply on exchanges stand for various assets. I've just highlighted a few quick ones that we can look at as kind of a uh, tutorial for how we can use this effectively, as well as for the legitimate use of giving you an upgrade as to where supply stands right now. Beginning with Bitcoin here, we're looking at two different charts overlaid on top of, or two different metrics, I should say, overlaid on top of price here in green. In pink here, we have the exchange flow balance, and I'm sorting it by 1 hour at a time. So it's basically showing me on every single hour, was there a major difference between inflows versus outflows, like we can see here on the positive side, or outflows versus inflows showing here on the negative side. In general, when we see an excess amount of inflows, it can lead to, it tends to sort of foreshadow tops, especially if they're not being combined with obviously outflows around the exact same time. So if they're isolated, that can be a clear-cut sign that something like this could happen where we're seeing a bit of an inflow spike. The price stays volatile, but eventually goes lower. And then eventually we have this isolated outflow spike and the price surges. So it tends to be a little more reliable on the inflow side because there's really only one purpose when it comes to coins moving to an exchange. That's at least theoretically going to be for the purpose of selling coins, transferring them away from your current holdings. On the outflow side, though, there can be multiple reasons. It's not just to put into cold wallets, it could be going from one exchange to another, sending to a friend, tons and tons of different reasons, making a legitimate payment for something in crypto. So for that reason, we look at inflow spikes on this high end as a little more of a reliable indicator than the outflow spikes are as a bottom indicator. All that said, what we're looking at now for Bitcoin tells us that it's mostly been kind of wishy-washy. Every time we're seeing spikes over this past month, they're generally coming with a little bit of an outflow afterwards. This one here was a legitimate inflow, and you can actually see it reflective in the blue line, which I'll get to in a second. But as of now, we did see the biggest inflow spike since it looks like late October today, at least for 1 hour. But then on the very next hour, we saw a very large outflow spike. So they've kind of canceled each other out. And the way we can tell whether these flow balance spikes are actually legitimate and something to pay attention to is how the supply and exchange is looking. In terms of the percent of supply, the ratio of Bitcoin that is on exchanges versus off. Generally, if you see the line declining, which it very clearly is right here, that's a sign that there is less risk of a major sell-off simply because there aren't as many coins possible to sell on an exchange. So logically, that makes sense. On the same respect, if you see a rise, whoops, as I accidentally right-click, go back to 3 months. So if you see a rise sort of like this right here, that's kind of an indication that these inflow spikes are actually something to worry about because they're basically justifying that coins are legitimately moving to exchanges and price tends to fall afterwards. But in the same respect, we look at the overall supply and exchanges, even going back to like the last year here. I mean, it's been pretty much ever since mid-May, after this big correction happened, it's been a nonstop free fall of Bitcoin moving away from exchanges and into cold wallets. It's not just going from exchange to exchange, and we know this because of the fact that we've dropped, in terms of the supply and exchanges, a little over 2.5% of all of Bitcoin supply that was on exchanges in mid-May is now off of exchanges just 7 months later. That's pretty shocking. That's a very, very big move. So all that being said, Bitcoin is looking kind of, I'd call this more good than bad because of the fact that the supply on exchanges is looking so good right now with so much continuing to move off without really any major upswings in sight like we saw here in October uh, on the 22nd, right as this dip was occurring. So keep that in mind. We'll move on to Ethereum and let's see what Ethereum's been up to. Let me move this to 3 months. So Ethereum has one very interesting thing on this chart, and I'm sure you guys all see it. This massive outflow spike, which saw a total of 1.98 million Ethereum move off of exchanges. And yes, the price moved down right afterwards, but that's not the point. The point is, for the long term, we just saw that in a single day, about 15.46% of the supply on exchanges, if you look at the bubble at the top left there, and then the very next day it was at 13.76. So we literally had a 1.7% shift of Ethereum supply move from exchanges to cold wallets. And ever since, things have stayed low. This is a very, very good sign. Obviously, we can understand that there is just simply less Ethereum on exchanges to really impact the price at a continued basis. And the more Ethereum is moving off, the better. And just like Bitcoin, look at what Ethereum's done over the past year. Just a constant downswing. 1 year ago today, Ethereum supply on exchanges was 23.07%. We can hold down shift and scroll across here and see that 9.35% of the supply has now been moved away from exchanges. That's even more massive than Bitcoin by a large margin. So Ethereum overall looking good. And we're not really seeing any major exchange flow balance spikes. Obviously things are a bit dwarfed on this axis because of this spike, but even without it, I can zoom in here. This is still fractional compared to most of the other spikes that have occurred on the exchange flow balance side over the past year or so. So just keep that in mind. There's Ethereum. Let's move on to Shiba. You'll notice that all of the assets I'm looking at here, all 6 of them, are ERC20s. That's because we only have this type of metric, exchange flow balance and supply on exchanges, if it's an ERC20. We have a few others that are non-ERC20s that are in the top 10 or so. But for the purpose of this, I'm sticking with Ethereum-based projects. So similar phenomenon happened with Shiba. We had this big outflow spike that, if compared to the supply on exchanges, you can tell was a legitimate move off of exchanges and not just an exchange to exchange type of spike. So we went from 15.02% of supply on November 29th to 13.25% the next day. Again, very massive. Shiba is yes, it's a top 10 asset now, but it's still fractional compared to Bitcoin and Ethereum. So you can't expect to see, some of the bigger moves happen without as much resistance and friction as you would see with Bitcoin and Ethereum with a much smaller market cap. And yeah, if we look at something like this is what I'm talking about, where there's like one big outflow spike 1 hour and then one inflow spike the very next hour. And you can see through the blue line here, it was essentially a wash. As of late for Shiba, notice how the supply is actually rising. And that hasn't really happened much, at least in the last 3 months. But we did see, as this price decline happened in mid-May, look at how much the supply of Shiba was really moving onto exchanges, even before then, going back to before we really had public pricing on it. So we're really seeing the first time that the supply is legitimately rising since mid-May right now. So I'd call that a pretty decent concern. If we zoom in here, just check out like the last 2 to 3 weeks or so. this is interesting. We're seeing a very sustained amount of inflow. Instead of just the isolated spikes like you'd normally see, it looks like it's a pretty collective effort to move a lot of Shiba onto exchanges at the same time, hour after hour. And that undoubtedly is impacting the fact that the supply on exchanges is rising the way it is right now. Let's see, MATIC here. MATIC's obviously been one of the hotter altcoins over the past week or so after a pretty big correction, and it's trying to get close to its all-time high once again. With that said, look at how well this inflow spike right here was timed with the local top. These are the kinds of things that can really be advantageous. At the same time, you notice how the supply and exchanges went up temporarily on the day it happened, but then immediately started sinking again. So if the price was dropping here and you were really starting to FUD out and say, what am I doing in MATIC? I got to get out. You might be put at ease and be reminded that it can eventually turn around. If you're seeing the supply and exchanges just plummet the way it has been, just in the past, call it month and a half, the supply and exchanges with MATIC went from 9.79 to 6.85. Not quite like a 50% deduction, but maybe something like 40%, just doing some quick rough math. So that's very interesting to see. Also notice this very small inflow spike actually correlated with a local bottom, and things have been moving up ever since. As long as the supply and exchanges stays low, I wouldn't be too worried about the fact that this was an inflow spike and not an outflow spike. Outflow spike would be better, like we saw here, that correlated with the big rise that happened right after. But all things considered, MATIC is looking pretty safe on the exchange side of things, considering how low it's been. And of course, I say on the exchange side of things because of the fact that there are so many different on-chain and social metrics to factor in when deciding whether a price is going to go up or down. My job is never to give you investment advice. It's simply to point out how a few projects are looking with one particular metric, which in this case is exchange flow balance and supply on exchanges. Moving on to Chainlink here. Kind of an interesting 3 months for it. Chainlink's actually been getting kind of hurt for a while. It's not performing the way a lot of its large and vocal audience were hoping, especially after hitting this all-time high on November 10th. It's retraced, it looks like, just a little over half of its price. So it's actually had a 50% drop in the past 5-ish weeks or so. That's a lot. On the supply, though, we are seeing that there was a big plummet here right as this outflow spike occurred. And even though the price has been declining, I'd feel a little bit better knowing that the supply and exchanges moved so far down on this latest outflow spike. And it's really stayed down. This outflow spike and this outflow spike both seem to correlate with dips further down in supply and exchanges. So again, not a bad sign as of late for Chainlink. It's obviously gotten hammered. Don't think that just because something has dropped 50% and others might have only dropped 30%, that the minus 50% asset is the one to jump into, right? That's why we have these metrics to really give you an idea of whether something looks legitimately like a good investment from an on-chain or social side. And last but not least, I've got Tether, which you guys might be saying, oh, I didn't expect Tether to even have this kind of metric considering it's a stable coin. Well, we do. It's in the ERC20 just like anything else. And the interesting thing about Tether is it works the opposite way where more supply and exchanges in terms of the ratio of total Tether is actually better because it implies there is more buying power for you to get into or just for any trader to purchase an asset or a non-stable coin. That's what Tether's purpose mainly is for. So we're seeing ever since November 3rd, we're talking about give or take 7 weeks or so ago, we've seen the supply and exchanges go from just about 10 to, God, is it that high? Yeah, yes, yeah, it really is. So the supply and exchanges over the last 7 weeks has basically more than 3x'd from 10.02 to 31.28. That's absolutely ridiculous. So clearly people are loading up the chambers to buy, but that doesn't necessarily mean prices are just going to suddenly surge and all of this tether is going to be spent. It tends to be a little more complex than that. And there's some other tether metrics that we can look at on another video. But for the purpose of this one, it looks like supply and exchanges rising here is a nice sign. You can even get creative and kind of overlay Bitcoin's price against this tether chart that I'm showing right now. I'll get rid of the price of USDT, make Bitcoin green there so it makes more sense. And, it's, if I look at like the last year, we can see, let me get rid of the balance. We can see that typically, this kind of big spike of tether can lead to a rise. Sometimes not, though. As we saw in early June, it obviously wasn't as big of a spike. This one here actually occurred at the all-time high. So this was a lot of people trying to buy more, and it was a very polarizing time. And then there was a retracement. But now that there's a retracement and there's another spike in tether, that's a better sign because it certainly isn't just due to FOMO when the price is dropping. It's due to people looking to buy the dip. So it's a much different scenario than what we saw here. I'll conclude this here for now, but we can definitely talk more about exchange metrics on our Friday This Week in Crypto call. Chat with me or any of our staff members in the Discord server, and we'll be happy to help. Hope this was interesting to you guys, and drop a like and subscribe. It's always appreciated, and I'll talk to y'all soon.